Assalamualaikum and very good morning to all. My name is Fathul Azim bin Nasri. Today, I would like to present about Introduction to Financial and Costing System. This is the contents of my presentation. For question 1 is define what is financial accounting. Financial accounting is the process of preparing financial statements that companies use to show their financial performance and position to people outside the company, including investors, creditors, suppliers, and customers. These transactions are summarized in the preparation of financial statement, including all the balance sheets, income statements, and cash flow statement that record to the company operating performance over a specific period. Next is define what is cost accounting. Cost accounting is a process of recording, analyzing, and reporting all of a company costs for both variable and fixed that related to the production of a product. This is so that a company management can make better financial decisions, introduce efficiencies, and budget accurately. The objective of cost accounting is to improve the business net profit margins, like how much profits each dollar of sales generate. Question 3 is provide 4 differences between financial accounting and cost accounting. The differences between financial accounting and cost accounting is information type. For financial for financial uh, For financial accounting, it's record the information which are in the monetary terms. Meanwhile, for a cost accounting, it's records the information related to material, labor, and overhead, which are used in the production process. Next, users. Users of information provided by the financial accounting are internal and external parties like creditors, shareholders, customers, and etc. While information provided by the cost accounting is used only by the internal management of the organization, like employees, directors, managers, supervisors, and etc. In addition, the differences between financial accounting and cost accounting is time reporting. For financial accounting, financial statements are reported at the end of the accounting period, which is normally 1 year. Besides, for cost accounting, the details provided by the cost accounting are frequently prepared and reported to the management. Lastly, profit analysis. Financial accounting for profit analysis much, such as income, expenditure, and profit, are analyzed together for a particular period of the whole entity. Meanwhile, for cost accounting, the profit analysis generally analyzed for a particular product, job, batch, or process. Question 2 is provide 5 objectives of financial and cost accounting. First objective of financial accounting is compliance with statutory requirements. One of the objectives is to ensure compliance with a local law related to the country where the business undertakes. It's ensure that the business affair adhere to such a laws and relevant provision comply while business is conducted. Second objective of financial accounting is safeguarding of interest to various stakeholders. It provides suitable and relevant information related to a business operation to various stakeholders such as shareholders, prospective investor, financier, customer, and creditors. They are not just appropriate for those who are having existing business relationship, but also for those who are interested in having future collaboration with the business by providing them with the meaningful information about the business. Further, financial accounting standards ensure control over accounting policies of business to protect the interests of investor. Third objective of financial accounting is helps in the measurement of profit and loss business. It measures the profitability of the business for a particular period and disclose the net profit or loss of the business as a whole. It also exhibits the assets and liabilities of the business. Fourth objective of financial accounting is focus on external transaction of business. It focuses on a transaction which is the business enters into external parties, which can be customers, suppliers, and etc. Based on this transaction, the accountants are prepared to quantify the business cost, incurred the expenses, and resultant profit or loss earned. Lastly, for objective financial accounting is to periodic the reporting and wide availability. Financial accounting is undertaken with a pre-specified uh, periodic reporting period, which is usually quarterly, half-yearly, and annually. It enables easy to comprise to comparison and also keeps the information relevant and informative for various stakeholders. Further, financial accounts are available publicly and are accessible to everyone who wants to know about the business and its performance. This is five objective of cost accounting. First objective of cost accounting is to ascertainment of cost. It enables the management to ascertain the cost of product, job, contract, service, or unit of production so as to develop cost standard. Cost may be ascertained under different circumstances using one or more type of costing principle like standard costing, marginal costing, and uniform costing. Second objective of cost accounting is fixation of selling price. Cost data is useful in the determination of selling price or quotations. Apart from cost ascertainment, the cost accountant analyzes the total cost into fixed and variable costs. This will help the management to fix the selling price sometimes below the total cost but above the variable cost. This will increase the volume of sales more than previously, thus leading to maximum profit. The scientific way of reducing the price is possible in an industry only where a sound costing system exists. In other words, cost reduction in the absence of costing system may cause to shut down the industry. Third objective of cost accounting is cost control. The object is to minimize the cost of manufacturing. Comparison of actual cost with standard reveals the discrepancies variances. If the variances are adverse, the management enters into investigation so as to adopt corrective action immediately. Fourth objective of cost accounting is matching cost with revenue. The determination of profitability of each product, process, department, and etc. is the important object of costing. Lastly, the objective of cost accounting is special cost studies and investigation. It undertakes special cost studies and investigation, and these are the basis for the management in decision making or policies. This will also include pricing of new product, contraction or expansion programs, closing down or continuing a department, product mix, price reduction in depression. Section 3 is question 3. Provide 10 internal users and external users of financial information together with reason why they need to use information. So first, let's take a look about external users. First is lenders. Assess the ability to settle amount owed to them when due, such as loan and interest. Second is investor. Concerned about risks and return of their investment, such as dividend. Third is governments. Information to enable them to regulate the business activities, determine taxation policies and basis regarding national income and similar statistics. Next is customer. Assess the ability of the company to continue providing products and service. Next is supplier. Offer a short period or long term if the company is likely to be their permanent customer. Next is agency. Information about the allocation and resources, for example, activity of the company. Next is public. Assess contribution to a local company such as employment and business opportunities for a local suppliers. Next is creditors. Assess ability to settle the amount owed when due. Next is trading partners. To decide to trade with the company. Lastly is auditors. External auditors examine the financial statements and the underlying accounting record of businesses in order to form an audit opinion. Now let's take a look about internal users. First is finance managers. Financial information enables the finance department to evaluate the ability of the organization or company to pay its business debts. Next is management. Management use of financial information as guideline to plan, organize, and control the organization and analyze the performance of the business. Next is marketing department. Financial information is used as guideline to determine the policies and the price of the products to be marked. Next is employees. Ability to provide salary and other benefits like retirement benefits. Next is employee unions. And employee unions use of financial information to ensure that their demands to the employees, such as salary, increments, and other benefits, are reasonable compared with the company's financial ability. Next is owners. To provide funds or capital for the organization. They also possess curiosity in knowing whether the business is being conducted on sound lines or not, and whether the capital is being employed properly or not. Next is managers are the primary user of financial statements because they need the information to do their jobs. They have to make decisions such as whether to add debt or how to maintain cash flow. Making those calls requires detailed knowledge about the company finance. Next is internal auditors, is to providing independent and objective evaluation of company financial and operational activities. Next is board directors, is to designing, implementing, and maintaining internal controls relevant to the preparation and fair presentation of this financial statement. Lastly is plant managers. They will oversee all daily operation of the plant from production and manufacturing to ensuring policies and procedures are followed. That's all from me. Thank you for your time. Assalamualaikum.